This isn't just a dividend update, it's a story of how investing didn't just grow my money, it helped me stay strong when life threw its hardest challenges at me. From health setbacks to career struggles, my portfolio became a lifeline, and today I'm talking about exactly how it kept me going. Hi, I'm Simone, and I'm just an ordinary person who's been investing in property since 2005 and in the stock market since 2014. The aim of my channel is to document and share my investing journey and to hopefully inspire some of you to invest along the way, and to show you that the stock market isn't as scary or as risky as some of you might think. Just a disclaimer before we start. Nothing in this video is financial advice, but is just for entertainment and inspirational purposes only. Investing does carry risk, and you should always do your own research. Well, I've been out of work since April this year, and although I've completed endless amounts of application forms and attended a few interviews, I've been able to secure a job. The job market is just tough out there. I've never had a problem in the past with getting a job within just a few weeks of looking. Luckily though, it hasn't been too stressful because I had and still have savings to live off, and because I have a small amount of property income if I need. And if worse comes to the worst, I have stocks and shares that I can sell if need be. I hope it won't come to that, but that's why I'm a big advocate of investing in stocks and shares. It just gives me peace of mind. I've still been investing the whole time though, reinvesting the dividends I've been getting and adding to it from my rental property income. I believe in investing for the long term, but if I desperately need money, I can liquidate my stocks immediately, unlike property. That's not my goal, however, and that's why I primarily invest in dividend stocks. I want to be able to draw passive income from my portfolio without having to sell off any of my stocks. I can then pass it on to my daughter when I'm gone, so she and her future family can continue benefiting from it. My aim is to keep investing in the market on a monthly basis and reinvesting my dividends for the next 10 years at least, God willing. If you want to follow my journey, please subscribe for more inspiration and updates to see how my investing is going. So in August 23, my life took an unpleasant turn and I suffered a stroke. When I came out of hospital, I was unable to walk unaided, unable to use my right arm and right hand. I couldn't write. The right side of my tongue didn't work properly, so I slurred when I spoke. I was slightly incontinent. My brain was fluffy and I couldn't think. I basically suffered right side weakness, which is why you don't see me moving this side of my body very much. I literally spent a whole month just sleeping on my sofa, but thanks to my mobile phone and trading 212, and my left hand, I was still able to invest. Thankfully, after 2 years, I have made a remarkable recovery and I can use my right arm more now, and I probably don't slur as much as you can probably hear, and I can walk longer distances. So let's get into the money. My trading 212 invest portfolio, as at the time of filming, currently sits at £1,837. It's made a return of 32.2% or £492, and the shares that have made a positive return in that account are Tesla, Netflix and ASML. There are a few stocks in there that have made a loss, but I recently decided that I am going to sell them off and reinvest the proceeds into my shares ISA and into dividend stocks. I no longer invest in this account because any gains are subject to tax. but instead I invest in my Trading 212 Stocks ISA account. Whilst we're talking about Trading 212, just to let you know, if you haven't started your investing journey yet and want to open an account with as little as £1, I have a link below which gives you a fractional share worth up to £100 to get you started. They'll also give me a share as well, so win-win for both of us. Trading 212 are my go-to broker because they pay 4.05% on uninvested cash just sitting in the account. Trading 212 are FCSC regulated, so your funds are protected just like the high street banks. I also have a fund and share account with Hargreaves Lansdown, which I no longer invest in because of the high commission charges they charge when buying and selling stocks. I started my journey with them and I have my original purchase of Nvidia stocks of just £228 still in there, which is now valued at £38,721. That's a 34,989% gain. But I've already cashed out around £7,000 in Nvidia stock in the past. The value did go up to £47,000 a few months ago, but the technology stocks are on a bit of a downturn at the moment, and Nvidia is being rivaled by Google, who brought out their own chips. So guess what I did? I bought some more Nvidia stocks while they were on sale, and I also bought some Google too. So in my stocks ISA, I have £23,849 invested in stocks. I have a return of £4,130, which includes investment performance, dividends and interest. That's a rate of return of 69%, even taking into account the losses from the likes of Pinterest and Airbnb, which I recently sold. This is why I say that investing is not that risky if you know what you're doing. The majority of the stocks you own may be losers, but you can still have a positive return if you've bought strong, profitable companies as well. The stocks I own that are doing well at the moment and that you may have heard of are Microsoft, Google, Apple and Shopify, just to name a few. Let's talk about the dividends now. But just before we do, if you're thinking about starting your investment journey but feel that you need some guidance or some hand-holding, book an appointment for a 1-hour coaching session with me. The link is in the description below. I remember when I didn't know what dividends were, but I just kept seeing small amounts of cash deposits into my account. I just used to use them to reinvest back into buying more stocks. And now I am obsessed with dividends. Okay, so I'll just let you know the total amounts that I received for the months of June to October, as I think May was my last update. And I'll break down the dividends I received in November so as not to make it a long and boring video. So in June, I received a total of £71.62, and that was from 6 companies. In July, I received £70.11, and that was 9 payouts that month. In August, it was £56.56 from 6 payouts. September was £76.78, historically the largest payout of the year, and that was from 7 payouts. And in October, I received £70.21. Now for November's breakdown. I received payments from 6 companies, and they were British American Tobacco, ticker symbol BATS, who on the 7th of November paid me £21.07 for owning 35 shares in the company. I have a 48% gain on VATs, and the current yield is 5.41%. The yield changes based on share price at the time. Although tobacco products have been unpopular as of late, BATS has still seen growth in their share price. On the 13th, I was paid just 25p from Apple, ticker AAPL, for owning just 1.47 shares. I didn't buy Apple stock for the dividend, but instead for the potential share price growth. However, Apple's price had been stagnant for a while because they hadn't been very productive, so I stopped buying. I do have a 50% gain on the shares that I do own though, and the yield is just 0.37%, so you can see why I received such a small dividend. The next day, on the 14th, I was paid £4.54 by Realty Income, ticker symbol O, which I own 26 shares of. Realty Income pay out a dividend every month, and it's been my goal this year to reach £5 a month. So hopefully, with just one more month to go, I will reach that. I am down 4.85% on my Realty shares, which amount to £57, but I received over £40 in dividends this year and £24 last year. So overall, I'm break even, and the yield is 5.58%. And on the same day, I was paid £8.36 by AbbVie, ticker symbol ABBV, with 7.89 shares, up 42% with a yield of 2.88%. Yesterday, on the 28th of November, I received a nice payment from Greencoat UK Wind, ticker symbol UKW, which is down a massive 22.85% of £24.92 for holding 962 shares. And finally, Starbucks, who are also down 17%, also paid out yesterday, and that was £3.14 for 7.87 shares. Although the share prices might be down, companies can continue to pay out dividends if they're good companies with strong financial standing. So in total for November, I got paid £62.28 in dividends. That's a monthly average of £55.80 so far this year. If I do finish this year with an average over £50, I would have made my goal of reaching £600 in dividends for a year, which is a 33% increase on last year. So watch out for next month's video to see if I do make it. And remember, it's never too late to take control of your financial future. Until next time, thanks for watching and take care.